And we're pause just before the cameras roll. Alan, welcome to the show, man. Good to see you.
Hey, Michael, thanks so much for having me on.
Pleasure. So I'm really excited about today's topic. It sounds like a really sad thing for people who are normal people and not nerds. We're talking about cash flow and sales tax planning today, and I'm really genuinely excited. That shows what a massive nerd I am. But I just think this is one of the biggest areas that will save people's businesses and make them more money. So these are great things to have, right? I mean, just yeah, looking forward to this a lot, man. Where are you coming to us from today, Anne?
Yeah, so I'm actually my agency Free Cash was located in Los Angeles, California. So it's
Nice.
around 11 a.m. right now in the morning.
Fantastic.
I
Well,
call it
so
morning, but it's full
yeah,
afternoon, I guess.
excellent. So, just a quick word to those who are watching. If you're watching this live or on the replay, just do feel free to post any comments, any thoughts you have or worries you have about cash flow or sales tax, particularly. That's what these guys are very expert. They offer the whole package, and we'll talk about what you guys do. But anything to do with financial planning, cash flow management, sales tax, anything like that, just pop any comments, concerns, or questions you got. And if you've got any questions, we may be able to answer them at the end of the show, or we can always come back in and type some answers for you down the line as well. So that said, we are going to record the podcast as a separate entity in and of itself to get a nice clean start, so that people get to the good stuff as quick as they can on their podcast players. So, Alan, you ready to plunge in?
Yes, let's do it.
Let's do this thing. Okay, here we go. Get some water. Ladles and jelly spoons, boys and girls, welcome to the 10K Collective podcast, the place to be for 6, 7, and 8-figure Amazon and e-commerce sellers. Today we've got a subject that is genuinely exciting to me, and it may not sound exciting to you, but stick with it. We could make you more profits and stop your business going bang, as in completely going under from lack of cash. Now, that's a reason to stay listening, I think. So today we're going to talk about increasing your profits with cash flow and sales tax planning with Alan Chen from freecashflow.io. Alan's a certified public accountant, as in a chartered accountant equivalent in the US, and one of the founding partners of freecashflow.io. And they are focused on online and e-commerce business owners. They got combined 20 years experience. Alan's worked at Ernst & Young, so the real deal, seriously clever people. So fantastic topic as well. So Alan, warm welcome to the show.
Yeah, thank you so much, Michael, for having me on. It's a great
Pleasure.
opportunity. Thank you.
Yeah, I'm genuinely excited about this. You know why? Because I just think this is the missing piece. There's so much noise about PPC, Facebook ads, and branding, and those are really important topics. Of course they are, but this is so neglected. I don't even know why, because the most important, the serious business owners I know obsess about cash flow planning, and the ones who are struggling have no clue about their numbers. And I think there's a big clue there. So first thing, you just give us a quick intro to yourself. I mean, we've said the basics. Just fill that out in a minute if you need anything.
Yeah, of course. Yeah, thanks so much, Michael, first for the great introduction. And like my name is Alan, as I've mentioned. I'm a certified public accountant here in the States. I'm here located in Los Angeles, California. And our agency is basically, we're very focused on one niche and one niche only, that being online business and e-com owners, right? Where we're laser focused on these guys, and that's an advantage for our clients, because it gives you that feeling and confident that we know what we're talking about, because everything we do, all our knowledge base is on just this topic. And we basically offer what we call an all-in package, where we take care of all your sales tax, tax planning, your bookkeeping, and any kind of compliance and back-end valuation, financial planning needs. And we call it all-in package because I think the typical, I would say, tax accountant, right, or just someone you hire, will just do your taxes around the April 15th deadline, and they kind of disappear. But for us, we see ourselves more as your outsourced CFO, where we're always there in the background. If you ever have a question, you come to us instead of Google, right? You don't have to Google any more answers and get confused. You come to us, and we'll give you the right answer. If we don't know it, we go and research it. We have a great network of professionals in this field that can really step in and help you guys out too. So that's where we see ourselves, and it's, I really think, Michael, it's a really needed thing in the space, right? I actually did a little bit of Shopify last year. I started a store. And it was an eye-opening seeing a lot of these questions about these guys who are doing business, doing well, right, 6, 7 figures, and they would just ask very simple questions in the forums about taxes, and hey, I haven't filed in a couple of years. What do I do? Hey, is there penalties? And it's like it's like a nightmare to them that they haven't thought about it, but they just scale so fast. So we thought, wow, these guys, we really need to help these guys out and educate them more in the space.
Makes total sense, and I think you're right that I've seen in the Amazon space. So you were in a sort of parallel but very very similar space. That again, there's people can ramp up the sales figures, particularly in 2020. It was a crazy year for e-commerce.
It
but
was.
at any time in the last few years, I've been in this game since 2014. At any point, you could say you could see massive revenue growth. But revenue is just one number in a whole host of numbers, right? And people
No,
get
yeah.
very, very focused on just one number for a long
Way
time.
too focused.
Revenue,
You
yeah,
see like little screenshots, right? Where they just
yeah,
like, hey, I cracked this number, but
yeah.
how much profit did you actually make?
Yeah,
right?
yeah, exactly. And the thing is that I think at some point people realize it, but they kind of realize it in a panicked, emotional kind of bad state of mind, as opposed to seeing that coming. And I really think that you guys are right to observe this problem. I just think it's the biggest problem out there is people with revenue and no idea what's going on in their business financially. So let's get into this. The first thing I want to talk about is working capital, which is a very technical kind of sounding word, and cash flow planning. And those aren't sexy words to some people. They are to me because I believe massively. I didn't used to, but I now, from experience of working with some amazing sellers and some mediocre sellers and some downright terrible car crashes, the difference is understanding this stuff. So let's just dig into this. I think it's seriously important. But first of all, what on earth is working capital in the first place? And why does it even matter in e-commerce?
Yeah, I mean, working capital by itself is a very, I would say, simple formula or calculation you made, right? It's just the amount of money needed to finance the gap between your disbursement, which is the money you pay to a supplier, whoever, give you inventory, and receipts, which is payment from your customers. And why it matters for a lot of e-com owners is they have this gap, right? Especially I would say on the Amazon FBA side, where you need to bring in large amount of inventory, right? And that inventory usually comes from my experience, from overseas, from somewhere like China or maybe one of the southeastern countries over there. And the problem is, and I also faced this last year when I was doing it, is your cash gets tied up in this inventory, right? Think about it, how the slow freight system works from China. Like I remember when I was trying to ship like roast bears. That's one of my more popular products when I was doing Shopify. And I would buy, I think it was like 5,000 units, and my money would have been tied overseas for over 2 months. So that's money you can't use for any other purpose because it's literally on a boat and it's slowly coming across the ocean to you. And that's a problem, right? That is negative working capital for you because that's cash you can't use to carry out your other obligations that you have in your business. So, companies that don't manage this very well and have poor management of inventory and receivables, they face a very stagnant growth in their business. And sometimes it may be more negative consequences where they really just have to shut down the business because they just don't have the cash flow to keep their business going, keep their business going. So it's something like Michael just mentioned is not very well known term in ecom. I have never heard anyone mention it in any kind of forum or any kind of setting, but it's just so important to be able to calculate it and to know the financial health of your company.
Sorry, learn to work stream out here. One of the questions you get every 5 seconds on a Facebook group somewhere in an Amazon world, anyway, is absolutely you can put money on this. In fact, if I had £1 or $1 for every time I'd seen this, I'd be a rich man already. Which is, how much money do I need to start a private label business? And the answer, I believe, is the working capital requirement is how much money, right? Because if you do drop shipping, and we can talk about the cash flow of these things in a minute, but if you drop ship, the answer could be zero on, I guess, a little bit to set up your Shopify store. But, and if you're going to order something that costs $10,000 per shipment from China, and it's going to be on a boat for 3 months, and it takes you 7 months to sell it through, the answer is going to be much, much, much more. And this is, it's weird, isn't it? That on the one hand, there is a very, very, very common question, the commonest question, an extremely good question. And then there's the working capital on the other side. And somehow people just don't put those out there. And it took me several years to dig. I hadn't even heard the word working capital until I was working with what is now the owner of an 8-figure business, was 7 figures when I was working with him. And that was the first time I even heard the term. So is obviously, much needed. So if all you take away from this podcast is an obsession with the word working capital, folks, I think you will be doing well. But let's go a bit further.
Yeah.
So how do we calculate it? That was the thing that also took me about 2 years to get the answer. So let's not give that horrible experience to anyone else. How do you calculate the working capital requirements for a product line or even the whole business?
Yeah, working capital, like I said, it's very simple for it. It's really taking what you call your current assets, right, and minus your current liabilities. So I would say an eCom or online business, that can be your trade receivable plus your amount of inventory that you have minus whatever you owe your outstanding trade payable, which could be the amount that you owe to say your supplier or your vendor, right? And a lot of time, what you have to do to manage this formula, I would say, is basically how fast can you collect, right? How fast is the payout of whatever whatever platform you're on, was being Amazon payout or Shopify or e-commerce. I know some people are on, and what is the obligation of your trade receivable, right? Can you work out a good deal with your supplier, or do they need you to pay immediately, right? A lot of cases that may be the case where you have to prepaid your inventory, which means like scenario I was going into, Michael, where my money was tied up into it, right? But as you're growing, you may not want that case to be all the time. As you enter the 7 to 8 figure mark, you may have more, I would say, leverage over your supplier, where you can say, hey, I need more time to pay, right? I need more financial leverage. Where can I do net 15, which means you have 15 days from the invoice they may send you to pay, or net 30 or net 45. The longer you can push and get that gap of times where you need to pay your financial obligation, it's just going to be a better scenario where you're going to be falling under. So you kind of want to look at both sides, your payout plus your obligation timeline, to really determine how healthy of a business you have and how long you can last with your cash flow, due to months. And that's part of the reason why you do financial planning and forecasting.
Amazing. So let's just make sure that we've nailed any of the technical terms, because we're throwing a few around there. So receivables, assets, liabilities, and payables. So let's just make sure we've nailed those for those who are a bit unfamiliar with financials. Receivables means what?
Receivable means any kind of money that you expect to receive into your business, but you don't have at the current moment, right? Okay. So you can think of it as you invoice. If you're running an agency, you invoice a client, hey, you need to pay me $2,000. But then they whittle niddles. I'll give it to you next month. Don't worry about it. I'll give it to you 2 months later, right? Well, that's not good for your business. You don't have cash yet. You may be like, oh man, I'm gonna report this as my revenue. I made $2,000, but did the cash hit your bank? No.
Yeah, okay.
And that's what you gotta see, right? So you haven't received the cash.
So to keep it simple, for anyone who's selling on Amazon, that's basically going to be 14 days worth of cash maximum, isn't it, before they then pay it out to you? Okay. Then payables, I'm guessing, is the opposite. Can you give us like the simplest definition in the world of payables as well?
Yeah, payable is any liability you have, right? Anything that you owe money to another person or another vendor for. So it usually is, say, if you're bringing in inventory, it's probably your bill, right, for that cost of that inventory. Mm-hmm. If you're doing a lot of shipping, it may be the postage or the postage that you have to owe to the shipping company, right? Mm-hmm. It's any money that you owe that's on your books that you haven't paid yet. Which is in a way a good thing, because that means the longer you can hold that payable, it's better for your business, right? Because your cash actually physically haven't gone out the door to pay that.
So this is one of those counterintuitive things that I'm realizing with working capital requirement, that debt is good, which is kind of one of those things that most of us, I know that in America there seems to be a very big religious thing, and I'm not going to discuss religion or politics on a podcast because then it goes off the rails, but it does feel like there's a strange resistance around debt. There's a sort of moral thing, there's a fear thing, but actually it seems for me that working capital implies that you want to actually owe people money, because it means you have more cash in your bank. So,
it does. Yeah. Surprisingly, it does. You can think of it as just Wall Streets, right? Or anyone that's made it really big, and they talk about how much cash they're hoarding. Because really, no matter what period of time, cash is king. Right? Cash is king. You want to hold that cash as long as possible. It's the reason why people think real estate is such a great investment, right? And it is, in a way, if you're able to leverage someone else's money to buy this house, right? Like here in California, housing prices have gone through the roof these days, right? Especially post pandemic. So $1 million is probably like the standard where you can buy a house here for. But what you can do, right? You're not actually putting $1 million down to buy the house. What you're doing is maybe doing a down payment of $200,000. And you're borrowing the rest of that money to a bank if they're willing to give you that money. And that's what part of financial leverage is you're using $200,000 to buy $1 million asset, right? And you're doing that because you're able to use that financial leverage, and you're saying, you gotta give me 30 years to pay that back. You gotta be a 30-year mortgage, and that's a great deal in a way, right? As long as you can keep the interest rate under control, which right now with the Federal Reserve and the way the world is, it's very, very low, which is why the housing market is so competitive in the U.S. I'm sure it's having some of that effect in the UK too.
Yeah, well, I guess LA and London are probably some of the most expensive places in
Yeah,
the world for real estate. I
I
mean,
figure it
the
would be
street.
too there.
I mean, the houses around me here, they're probably going for, I guess, in dollars, I don't know, $4 million or something. And that's
4
not
million.
typical. But
There
yeah,
you
that's
go.
not typical for London. That's this area that I'm in. But yeah, it's yeah. So okay, good hint for people that should run off and do property and leave e-commerce. But for going back to e-commerce,
Gotta diversify, Michael. You gotta
yeah,
diversify
you got to
for sure.
diversify. But like coming back to e-commerce, let's just make sure I'm very wary of leaving technical words out there without explaining them. Those who are more sophisticated business operators will be going, "Duh, okay." But if we need to, if let's be honest, that some of us don't know what these words mean, even though they fling them around at drinks parties. Assets, liabilities. Let's just define those as well. Let's make sure we're clear. What is an asset in this
Yeah,
financial
it's
sense?
an asset. I would say use anything that's of value to your company, right? So you can think of it as, of course, cash, right? Inventory, and of course, any kind of accounts receivable, which, as you mentioned, is money that someone else owed to your business, right? Is usually the common category of that is. But then there's also things like fixed asset, right? Which is any tables, chairs, furniture, anything that you owe as a value, you usually put on the books. Sometimes it involve intangible things, right? If your business is very popular and you have a trademark or a logo or something that else is worth money, you will also add that to on your asset side.
Yeah,
Liabilities is the complete opposite of that. It's everything that you owe someone else, right? To that you have an obligation to pay someone else for. So you can think of that as, of course, your trade payable, or any money that you owe to a vendor, right? Any kind of vendor, any money that you owe because of a software that you owe to someone else, any loan that you taken out from a bank, right? Like a loan payable where you had to pay back a loan. So it's typically any kind of money that you have a future obligation for to pay down for a business. So and the working capital formula is simply taking your current asset, with current meaning anything that you have a year or less in a life on, and minusing by current liabilities, which is anything that you owe money to someone else within that 1 year, right? Would have a 1 year term. And then that will get you a number. And usually it's hardly ever zero, right? It's hardly your exit liability is perfectly zero. It's usually going to be, above water, which is positive, or you're going to have a negative number, right? Where your asset doesn't cover your liabilities, which is not good, which is something you need to evaluate in your business if that's the case of, well, why is that the case, right? So you kind of need to look at that as a good, I would say, status check of your business to see that where are you? Are you in a good financial health in your business, or are you in more trouble and you need to really dig deeper and say, in the next 12 months, am I going to stay this way, or is this a temporary state of being because my business is seasonal, right? Where maybe in Q1, Q2, this is what happens, but I always recover in Q3, Q4, and then that's just my cycle. But it's something you got to look at, and not that, oh, I think that's the case, but maybe in Q3, Q4, you're still in that same red state, right? You don't want your screen to be blinking red. That's usually not a good sign.
so
Ah,
sorry. Let's try that
no,
all
no
again.
problem.
So I've been muted for a bit. So if you're watching, we'll edit that out of the podcast. If you're watching on the live video, my apologies. Let me try that all again. So first of all, I guess what we're talking about are items on a balance sheet, right? So if you've been trained and this is the other thing, a lot of profit and loss is the only financial thing that, if you're lucky, gets talked about in Amazon world. Normally just revenue, but really sophisticated profit and loss. What you're just mentioning, I guess, are balance sheet items, right? So that kind of implies you probably need to sit down with an accountant and get a balance sheet made, I guess, right? Is that a fair statement?
It would be. It would be. And
Yeah.
I would just caution, it depends on what stage of business you're at, right? If you're just starting out your Amazon business, I would say just focus on growing your business. That's always the number one goal of a founder or CEO, right? Don't focus on tax and compliance yet. But as you approach six figure, I would say, anything above like 250, 300,000 a year in revenue, you should probably pay a little bit more attention because there's a lot of obligations there, not just with, the bookkeeping side. Of course, there's also a lot of tax implications there where, you have this obligation, you have the government, which a lot of people don't focus on, right? They don't see it. They just see their bottom line and say, oh, that's probably the money I'm keeping. A lot of cases, that's not the case. There's a whole tax piece, which is actually one of your biggest expenses, if you may, right? That can be in the US as much as 35% of your profit, possibly of your revenue, really, right? Depending on how well you do your tax planning. So something to always keep in mind. And then of course, you want to kind of just also focus on your business side, right? The whole thing about working capital requirement and the whole thing about cash flow forecast is not because anyone require you to do so. Maybe during an exit, someone may require you to do so, but it's for really your own purpose. You gotta be the master of your business, and you gotta have the grasp to know that you gotta know if your business is gonna last, right? If you're serious about e-commerce, if you're serious about growing an Amazon brand, these are just like the baseline numbers you got to know. And if you're not someone that's very, like, I'll say financially astute, I would hire a professional. I mean, I think part of being an e-com and what I've gone to is you kind of do everything, right? When I was just a one-man show, I was the website guy. I was the product ordering guy. I was the customer service guy, right? And then you get overwhelmed because you're just kind of involved in everything. And I think the last thing you want to do is also be the tax guy for your own business, right? So sometimes, and I'm sure a lot of people who have made 7, 8 figure do this, they go and hire someone who's very talented, who's very good at, say, I don't know, email marketing, right? Or really good running Facebook ads. And they said, you go do this. I'm going to keep focusing on growing my business, discovering new product lines like a CEO should. And you go do that and because you're good at it. And that's why I want to caution a lot of guys who are doing 7, 8 figure is you may want to also do that for your financial planning and your tax stuff, right? Go hire someone who really understands your business, who can really help you, get back what I call your tax revenue, your tax profit from it, because it is another stream of profit. To maybe not pay 35 to 80% and only pay 15 to 20%. That's another 10% you're keeping in your business. And that's no small dollars, Michael, when you think about a 7, 8 figure guy, right? Like just you can do some mental math in your head. That could be a good 50,000 more that you're keeping at the end of the day. So
yeah, that's huge. And the other thing to say is that when it comes to percentages, again, people get extremely confused that you add 10% of your revenue to your profits. Okay, but if your profit was only 20%, your pre-tax profit was 20%, let's say your net profit, so after everything, including tax, let's say that ended up about 15% of your revenue. If you add another 10%, you've almost doubled your profit, the money that actually goes into your pocket. So yeah, these are huge savings. I think that the difference between 15, 20% sort of effective tax rate versus 35 is just monstrous. That could be the difference between you getting your Ferrari and just living in a pretty lovely house. I mean, it's really quite big. So coming back to the, tax needs aside, which is huge, but we're going to talk about in a minute. Let's talk a little bit more about the financial planning piece. So just to reiterate what you were just saying, because nobody's forces you to do your financial planning, whereas tax, at least, it sounds like a funny thing to say. The good thing about tax is we're at least forced to do it. If we didn't have that tax, I mean, nobody wants to pay tax, but if we didn't have to fill out a tax return, we wouldn't be forced even once a year to look at the numbers. And if you're like me, naturally what you do is once a year, your accountant gets in touch with you, you do your numbers, and then for the first time, possibly months behind, you go, oh, I'm spending way too much money on X, where X is normally something like PPC or advertising often.
Yeah.
And then you realize very late. But what you're saying is, I guess you have to actually take responsibility to get ahead of it and stay on top of it. So I guess the basic thing, which people have probably talked about, is bookkeeping. I'm not going to get into that there because I don't find that personally very sexy, but I guess it's got to be done, right? Let's talk about how do we project forwards, though? For me, the interesting thing is even with a new business where there's no revenue yet, how do I try and see forward to answer questions like, how much money do I need to run this business? Or how much money I'm going to have at the end of next year? Can I afford to take an owner's salary and quit my day job or go part-time? Questions like that. So how do we do the basics of projecting forwards and answering questions like that?
Yeah, that's a great question, Michael. And that's kind of part of the cash flow projection that needs to be done, right? So, part of an eCom business, I know, Michael, you mentioned bookkeeping's not very sexy, and it's not. I get it, and that's why we kind of take the boring part away from the business owners and our clients. But the thing is, it has to be done, right? If you don't have clean bookkeeping, if you don't have a chart of account, which is what a chart account, for those who don't know, is basically a way to categorize all your expenses into the right bucket, I would say, right? So then you have, all your meals in one place, all your office supplies in one place, all your PPC expenses in one place. So then you can kind of categorize and know how much money you're spending on each of these categories and how much of it is affecting your revenue and how much you're affecting your bottom line, your profit, right? Because at the end of the day, profit is key. And without knowing all these facts of your current state, it's very difficult to have any kind of accurate forecast going into the future, right? If you don't know that you can depend on your current bookkeeping, your this month's bookkeeping, or your this quarter, you're not going to have very good data, right? Forecasting is all about having the right inputs and the right data points to know what's in the future, right? What forecasting really is just a game of using your historical context. So how much long you have been in your business, it's better, right? If you have been at least a year, that's great, because you have a year of cycle changes, right, going up and down in your business to kind of look through and say, okay, if my business grow by X, right, 2X, then will my expenses all just stay the same? Because is that a fair assumption? If my business grow by 2X, is my bottom line gonna be the same? Or is there some increases I'm not going to be aware of and I'm not going to catch, right? Because my inventory costs could be a lot higher, because shipping 2 tons of goods, it's a lot more than 1 ton. Or maybe it's the opposite. Maybe I'm getting a bulk discount. Hopefully you guys are. If you guys are doing even more business, you're getting even better per unit costs on your inventory. And same with inventory. Same with like doing like ads, right? Paid ads. Like it gets out of control sometimes, right? You do a lot of testing. You test this one, and then you see which one works for you. But one of the highest costs on a lot of e-com business we've seen is going to be that piece, right? And we do a lot of what we call metric ratios. But then we don't only do metric ratios, because we only focus on online businesses. We compare your books to other similar e-com businesses in the field. And what that does is you get that advantage of knowing, is your books in line? Is your margins looking good? And if this person is getting XX deduction of tax credit, why can't you if you're in a similar industry? So you get that big data look of businesses, because you're able to do that comparison. And with that, you're able to do even more of an accurate forecast, I would say, Michael, where you can look 12 months and say, I have all these other businesses who similar to mine, who are able to also forecast these numbers out and say, this is what I need to be making also, right? But then you also know if you're falling behind at any point, right? So then you're able to see that, every month in my ending cash, is that what do I need? First of all, is, do I survive in this business as operating, right? And whatever's remaining outside of operating, hopefully that is your kind of your cash reserve, where you can do anything you want with, right? That's what we call the owner's treasure. You can take it out to be your owner's draw, right? You can go buy that Ferrari. I'm sure Michael wants to. Or you can also, reinvest in your business or diversify, as we mentioned, buy real estate if you want to, buy stocks and bonds, right? Or buy a different business even, right? Like if you wanted to get in, if you're in the nutrition field and you see the fitness is the next hot thing, you maybe want to use that cash to do that. But you got to know if that's a fact that you can use that cash, right? Without knowing that fact and just, seeing a number, Michael, in your bank account. Oh, I think I have 100,000 left. Don't do that. Don't spend that money and buy another business, and then you realize you can't support your next year's run in your business because you didn't do any forecasting. You didn't know that you need to keep at least 30,000-40,000 to buy the next round of inventory. Yeah. Right? Because your payout isn't fast enough to catch up to it. You never want to be in that position. It's I feel like a lot of movies, like, they play this up, right? Of a business who was very successful and then they just burned out and they're living on the streets. Yeah, don't be like that movie scenario.
Don't be that person. Well, the joking apart, I mean, I've been around this space for pretty much 7 years now, and there's a lot of people that have come and gone in that time with businesses, and the ones that talk about revenue a lot, generally they kind of come and then they go, because there's a degree of luck in this thing as well. But there's luck plus skill is, real entrepreneurship, right? I think the luck without skill generally goes up dramatically, and then sometimes very dramatically straight back down as well. So I guess we're sold on the idea of needing to project things. So I guess, like property, you because most of us property, or real estate as you call it in the States, so I guess it's more familiar. It feels to me like the comparisons thing that you mentioned is interesting to me, because most people tend to project forwards based on their own data, and that's a good thing to a degree. But obviously, if somebody's been in business for like 1 year and they've sold maybe 3 whole product lines, and the thing with Amazon particularly, I mean, Shopify harder to do but possible, I guess, is you could probably sell 3, 4, 5 product lines. I was speaking to somebody the other day who's doing amazingly well. And I think he just mentioned, maybe it was off air, it wasn't really a discussion point. He's only got 8 product lines. I'm like, wow, you get into $4 million run rate with 8 product lines. That is not a very big spread of products
Impressive.
from which to then, extrapolate data. So the idea of comparisons to similar businesses makes a lot of sense to me. And obviously you guys do this in a very sophisticated way for your clients. Is there a way in which people can do that for themselves to some degree?
To some degree, yes. I mean, I guess there's 2 levels to this, Michael, right? The first level is if you're a guy who has 8 product lines, I would actually just try to do a breakdown of those 8 product lines, right? That's also what we help our clients do, is that we look at each product line as its own profit and loss statement, as its own P&L, because we want to see with that profit line, how much did it cost for you to buy it? How much did it cost for you to get this item in? What is the packaging cost around it? All those other things, right? What's your exact Amazon fees, storage fees, if you may, related to that product? And then how healthy is that product going? And we look at, your inventory turnover for that product. We look at the health of that product. Is it going to be something that the market demands over the next 12 to 24 months? And then we take each of these as its own kind of entity, and we say, look, you have 8 products, but actually, let's say you only have 3 winners from here, right? You only have 3 products that we feel like the market is going to keep accepting and keep growing. And maybe it's also your strongest because your profit is actually the strongest for the 3. And the other 5 is actually dragging your business down in a way where it's actually pulling down your net profit. And you actually don't want to keep those going. You maybe want to go and discover another 5 products that may be better, right? You never want to be in a situation where your business is not doing healthy because you're selling a certain product that's actually not profitable. You're just breaking even. Like why spend effort doing that, right? And then on the second level, of course, the comparison part. That I think you just need to if you're just a solo Amazon FBA seller, maybe go and network, right, with other Amazon FBA guys, right? I think last week I just attended a eCom conference, and it was a great opportunity to meet other eCom owners, and you kind of just chat and talk about your business, right? You can kind of say, hey, how many products are you selling? How profitable are you? What do you know your profit margin is? And those are little questions and tips you can kind of gather and be like, oh, they're doing 20%. Why am I only doing 15? What am I doing wrong? How can I improve, right? So I think networking is a big key in that. But otherwise, it's not the the most public topic, I would say, Michael, to say, hey, how much money are you making?
I was going to say,
straight up and ask that, right? And then they might not be willing to share unless they're good buddies with you or something.
Yeah, I mean, one thing I would say just on that point is that something I do know about quasi, I suppose at this point, experts, an overused word, but certainly I've done a lot of masterminds that I've run now over the years in the e-commerce space. And one of the reasons for being in a mastermind is so that you can actually share information like that. That's very commercially sensitive information. If I were at a networking event, I would not talk to a guy twice who asked me what my profit margin was, what my gross margin, whatever. But actually, these are critical questions, and I want to know the answers. So having a trusted space within which to do that, I mean, the 10K Collective Mastermind is what we have, as it's sort of hidden by the microphone. But we've been running that for 3.5 years now, and it is really valuable for somebody to sit there, because we had in a mastermind in the past, I've had somebody who's very similar revenue, maybe like $1.2 million between 2 businesses, one of which has got a 5% margin before tax, which is pretty sad. And the other one is 29%. And like, it's really striking difference.
Huge difference.
It's really important. I mean, I've sat there and literally kind of tried to point out to the guy with the 5%, like, yeah, this is possible. This is what you're doing. Hint, like, go and make it more profitable.
No, that's exactly it, Michael.
Yeah,
that's exactly it. You that's the kind of hints we give our clients too, right? Everyone think they're running a very successful business. Everyone think that they're doing well at the moment, but until you do that market comparison or to your peers, you don't actually know if you're doing industry standard, right?
Yeah.
And you got to cut the fat, right? If you have 5 product lines that's not bringing in the profit, like they're the 5%, right? They're the 5% net profit guys. You don't want to keep that inventory. Like, Amazon storage fee is expensive, right?
Yeah.
You don't want to have this sitting there and burning you money, burning your operating expense down.
Yeah, absolutely right. And I would say, by the way, I've worked with some businesses that have more like 1,000 SKUs on Amazon, and
Oh,
in
wow.
that case, you need to do a serious bit of analysis. And but some of them do. Like I have clients, it's very rewarding when I have clients and I say go and do X, and they go and do it. They do an 80/20 analysis, and normally I've found that if you have say 300 products on Amazon, normally 10 of them are doing most of your profit. It really is
Exactly.
95/5 a lot of the time. So absolutely, you cut the fat. Yeah, here, as they say in the UK Parliament, here, cut the fat for goodness sake. So let's talk about the cash flow projection thing. So I've got a listing here, a list from our conversation before when we planned this. 3 things to look for: operating, investing, and financing. What does that mean in ordinary English? How do we sort of start to get our head around what we're trying to,
Yeah,
look for? What are we
and I
projecting?
just want to premise this where like most companies starting out don't need something this I'll
Yeah.
say complex, right?
Yes.
Just want to run that. Most companies out there they probably only need the operating part. The
Fine.
operating part is like the kind of word is basically your operational cash in your business, right? What keeps your business going, and you can think of it as the simplest terms, like we have mentioned, is just cash coming in from your customers and to pay out from Amazon and the timing of that, and any kind of money that's going out of your business, right? The other two is things that you as you get to a 7 to 8 figure business, you may have and may be starting to invest in your business. Investing, the investing category in a statement of cash flow is basically any kind of investment that you've taken on, right? If your business grown to a point where maybe you start, either branding your product or just creating your own product line, and you have a manufacturing line or an assembly plant, and you're actually investing money into, I would say, like capital assets, right? Into property, plant, equipment is what they call, that category is called. That's where you put into investing. And financing is any money that you have where your business is growing, you have done the bookkeeping, and you have a very good profit margin, very good gross margin, and you know that you can do more, right? It's just that you don't have the cash flow to do it. So a lot of time what businesses do is they go take a business loan out, which in this way is actually a great tool for you to expand faster than ever, right? If you imagine, if your business is doing very well, your inventory turnover is just through the roof. You just can't keep up with it, right? And then what you do is you just go and take out a loan, and you're able to supply an even greater inventory count in Amazon, for example. Then you can grow your business even faster, right? Because your business is healthy, all your ratio is positive. Then why not take out that loan? And that's what you kind of keep up in the financing portion of your cash flow. So with those three combined, if you were to do a complete cash flow statement, you get to a bottom where it's just a very simple thing: cash that you were starting out with, and cash you have at the end of the day, whatever this, maybe you're doing it in year end, maybe 12/31, right, 2020, and cash you have remaining, and that number is hopefully have accounted for everything that you possibly can pay in and out of your business, and what you really truly have as far as cash that you can use for other things. It's kind of the name of our business, name of our agency, I should say, free cash flow. It's money that you freely can use, liquid cash that you can use for anything you want, and yourself. You spend on
Liquid cash.
yourself, spend on and back into your business, reinvest, right? If you have any left.
Yeah.
Sometimes businesses, when they grow very big, they actually don't want liquid cash, and I can understand that because they're just hungry and they don't want to keep growing. But I do want to caution, things go wrong all the time in eCom and Amazon FBA. Clients change, climate change. Maybe they don't like washer tablets anymore, right? People just change their taste, right? Or people are becoming more vegan and they don't like meat products anymore. Like you really want to know the market demand, also the trending of your product, also in that 12-18 month forecast you're doing. That has to be a factor, right? You can't just say, I think I'm doing X right now, I'm always going to be doing X. If you do that, you're going to get yourself in trouble, especially if you're in a high cash flow business where you're just using tons of cash every month to supply your business. It doesn't work, right?
Yeah.
I see our client's bank statement where there would be like 6-7 figures going in, 6-7 figures going out. So just so much cash moving in and out, and then you're left with a smaller number, and you don't want that smaller number to shrink even more, because you got to keep those two numbers in balance. It's a little bit scary when you don't know them.
Yeah, yeah, absolutely. So just to kind of summarize, I mean, it sounds like the 3 things: operating, investing, finances. I mean, I take your point that operating cash uh, may be the most important focus, and investing actually, like, buying property or plant is unusual for most people that are doing where they outsource their manufacturing, which is nearly everybody, right? But
Right.
I think financing is pretty common. I've seen quite a lot of early stage businesses that are only doing, say, $10,000, $20,000 a month that have substantial loans. Now, whether that's advisable is a different question, but they certainly use it. And I would say that the amount of, as somebody pointed out to me last year, okay, if you've got a 30% gross margin on your profits products after ads, which is quite good. That sounds good, but if your market is growing by over 30% a year, as it did last year in 2020, you're going to be short of cash, even though you're profitable, and you're going to have to get money, either invest it or borrow it, right? So I think you're right that that's not an area that we can just neglect for very long, the finance side. So let's talk a little bit more about. I know that let's skip over some. There's some juicy topics on our outline here, but I'm going to skip over them because I want to talk about tax, because obviously it's not a lovely topic. We always think of it as something you have to do, but you want to get it out of the way quickly. Like, today I went for a vaccination for COVID. I don't want to know about it. I just want it to be done and over. But actually, from what you've said already, there's huge amounts of profit we could take from this. So tell me about sales tax planning in general. What are the sort of main principles we need to think about here?
Yeah, so I know sales tax is very much of a central U.S. topic, but for a lot of U.S. sellers out there, it's something you can't escape from, right? So sales tax, unfortunately, in the current climate, and because of the court case of South Dakota versus Wayfair, it's going to affect all online businesses that operate in the U.S. now. And what it is basically, because you sell in a certain state, right? You have customer concentration in a certain state, you're responsible for remitting sales tax to the state government. And percentages are different. Unfortunately, there's no unified federal federal sales tax percentage you can depend on. You literally have to go state by state and look at the sales tax rate and figure out what that is. And Michael, to take it a step further, not only are you looking at state sales tax, there's also local, county, city, and other jurisdictions among the state where they want a little piece of that sales that you're making. So you got to take that, combine it by the local tax rate, and that's how much money you got to remit to the government for your sales tax. So an Amazon business, I would say that's any kind of online business doing 6, 7, 8 figures. This is kind of like the point where you start thinking about it, especially if you're 7 figures and plus. In that, because you probably have enough of a concentration of customers that you're selling in a state. So let's just take Florida, for example, right? Florida has a sales tax threshold of 100,000 or 200 transactions. Meaning that if you have $100,000 sales that have been made to the state of Florida, meaning you ship $100,000 product to the state of Florida, they're expecting you to first register for a sales tax permit. That's how you legally are able to collect sales tax. And then 2, they're expecting you to do possibly quarterly sales tax filings, where you take how much sales you have made in that state and then report it, and then say, hey, we need the X percentage that you have collected of that income from these customers. And it's just a topic that's you can tell it's going to be very not just very, I would even say, annoying, right? Because you're not doing this on a federal level, you're doing it on a state by state level, and there's 50 states in the U.S. and I think 45 of them require sales tax remitting. So you can tell why that's such a headache, and we see this question all the time in forums of, hey, how do I do sales tax for a certain state? What do I do here? And I'm living in this state. What do I do? And the unfortunate fact is, right now in the current state, that it doesn't matter where you live, right? It used to be you had to be physically connected to that state, right? Physically living in that state, or physically have a warehouse, or have a fulfillment center in that state. That's called physical nexus. Now is what they call economic nexus. So as long as you have enough of a concentration of sales in a state, well, Michael, you're being obligated to pay for those states too that you have a high sales in. And a lot of our clients are facing that issue right now, and that's part of what we're trying to help them solve and alleviate from their list of problems that they have in their business.
It's a scary thing to try and deal with on your own, isn't it? So I guess one obvious question is, when do you need to reach out for professional help? Is it possible to DIY this stuff? And by the way, let's focus in on those who primarily sell on Amazon for the moment, just to simplify this.
Sure.
It's so complex. Most of those have what I understand to be marketplace agreements, which is to say that the state makes the marketplace, in this case, Amazon, could be eBay, could be Walmart.com, responsible for the collection and submission of sales tax, right? I mean, do we have any obligations if we're in a state like that as individual e-commerce operators? or can we
Yeah,
just leave
so
Amazon to take care of it?
yeah, Amazon has an advantage in there in that they do have that marketplace facilitator agreement, as you mentioned, Michael. In that, other places like Shopify, they think they have the same agreement as Amazon, but they actually don't. So they get into more, I'll say, in the trouble zone of sales tax, where if Amazon are taking care of it, what you really want to do is just making sure that they're doing the right numbers for you, right? And also your other point about, is there a way you can manage it yourself? Yeah, there are sales tax automation software out there. Two of them I can name for you guys is TaxJar and Avalara. They're basically a way for you to feed over your Amazon or Shopify sales data and your customer listing, and then they will help you allocate and separate things into buckets, and then of course you can use their service to help your sales tax needs, right? Which is also great. Nothing against those services. I would just say you may also still want a professional to look over whatever they're doing, because you don't understand it, right? You don't know if they're remitting the right amount for you. You don't know if you're overpaying. And then speaking of overpaying, one thing that they're not going to help you do is, of course, sales tax planning. What I mean by sales tax planning is, as you can see, all these states have different thresholds that you have to meet, right? Some states are 100,000, some 250, some 500. And when you're doing sales tax with these software, they're not actually looking to do any planning for you. They're just making sure you're compliant, right? To do actual sales tax planning is you kind of look ahead and say, I think I'm selling around $80,000 to this state. Let's call it obscene state, say Wyoming, right? And then you're just saying, should I actually keep selling to this state, or should I stop? And why is that advantage? Is because maybe if that state has 100,000 threshold, and you can say, hey, I'm telling my client, hey, you're in November, maybe it's better for you to point your advertisement to the other states and stop selling Wyoming, because once you hit that 100,000, that's when you need to register. But if you don't hit it, even if you're at 99,999, you're not obligated to pay sales tax in Wyoming anymore. And that's a 7 to 10% saving, right, on your sales tax percentage that you're not having to pay out because you're right under that cusp, right? And that's something software what Amazon's not going to look out for you to do. But if you have a professional, they can say, hey, this is the point where you may need to focus your sales strategy on some other states, because you've already crossed the threshold there. You're going to be paying California anyway, for example, right? So you might as well just keep selling California, but maybe leave some other states alone and really save that money. That's money going back into your pocket.
So, I mean, it strikes me there's a few big differences that start to kick in once you're looking at sales tax. And I've really been quite so clear about this until we've spoken about this today. But the marketplace facilitator thing means that Amazon does help us avoid a lot of these problems, but not all of them. I guess but the flip side is we don't have any control where Amazon's going to sell our inventory in which states. So obviously we can't really control that. Once you're in the Shopify world, and I guess you can do geo-targeted Google ads, for example, then you could decide that you're not going to target anywhere, selling all the stuff in LA anymore because you're just about to hit the sales threshold there. Or maybe you're over that threshold in California. You just say, well, okay, let's just sell really aggressively to LA because they're buying our stuff, but you avoid Florida. So I guess once you've got your own thing, you need to have a lot more. You got more control, but then you need to take control as well. So I guess that's when having somebody it strikes me as a little bit like having an expert tennis coach or something. Like, you want to get the ball just inside the line, not out, because that's a penalty, or in our case, it'd be a fine or a legal issue, but not just miles inside where you're wasting potential where you could sell tax free. So that sounds like really something very necessary when you point out, the difference between selling $99,000 in Florida and 100,000. What's the kind of tax difference if I sold $99,000 worth of stuff in Florida or 100,000? What difference would that make?
That the difference is literally, Michael, if you have to pay sales tax or not to the state of Florida.
And that would be what, 10%, 20%? I mean, I know it's going to vary a huge amount.
Give me a ballpark. I would say I don't want to give an exact number because, like I said, sales tax is just it's so nuanced because it's not just a state rate. You have to actually dig down to the local city zip code of that exact customer and where the shipping address is, and that can trigger other little rates to add up to the just state sales tax rate. That's the complication there, right? So and the difference is literally you're paying sales tax to the state of Florida or you don't have to. That's the huge difference. It is, and it's 7 to 10% of your total sales to that state.
Yeah, plus presumably the cost of submitting all the forms and
and doing all the work, right? That's so if you think of it 100,000, that's like 7 to 10,000, right? 7 to 10%. Yeah.
Okay, so I'm not going to go too deep into that particular geographically based thing because for the majority of listeners, probably more focused on Amazon, at least in my mind. Do get in touch, guys, or comment if you do sell on Shopify to the level where this is hitting you. But nevertheless, worth having somebody on your side. So then the final area, and these are huge topic areas, right? We could dig very deep for a long time into any of these, but just skimming the surface. Income tax. Now, obviously, income tax is again, everything in America is complicated because of the federal versus state thing. But
Yeah,
let's
IRS makes
try and
everything
zoom out
complicated.
a little bit so that we get some general ideas about income tax management, as in corporate tax on a corporation, I guess, that are applicable as widely as possible. What are the basic things to look out for there, and the sort of strategies that you would guide your clients through?
Yeah, I think income tax is one of those topics where, again, it's not sexy. It's not something that most ecom or Amazon or Shopify owners want to talk about and want to actively think. I think a lot of the time they just actively avoid it, right? But the thing is, income tax is a topic you guys really do need to kind of pay attention to, because it's one of those areas where it's what they call leaky, right? It's a way where you can kind of like give money away that's just so unknown to you because you're not familiar with that world. Like, you guys maybe have become, you guys are experts on Amazon now. You got your paid ads down. You know how to get the lowest price of your inventory. But if you don't do tax planning in general, you're actually giving away some of that hard-earned money that you make to the U.S. government, or to really any government, really, right? UK, I'm sure they have obligation over there too. And the thing is, if you don't do tax planning, I see businesses that we help who just hire a tax accountant to really and when you're talking about tax, it's just a bunch of forms. You fill out these forms, and at the end of the form, they tell you, hey, you got to pay this, and that's like normally okay if you're just individual, who don't have a lot of deduction. But for businesses out there who are doing 7 figures plus, people who are even mid 6 figures, they have a lot of, I would say, deductions, business deductions that they're not capturing, credits that they make available to small business because the government wants to incentivize small business to keep growing, that they're not getting. And because you're not getting these things, you're thinking that you have, say, a $70,000 tax bill, when if you are able to apply the deductions and credit, you maybe reduce that to 30 or 40 or even lower, right? And that difference in gap, that's savings you get. And some people think this is magic or voodoo when you're like, I'm not supposed to pay this much. No, that's one of the great things about being an entrepreneur, being a business owner, and that you're afforded so much more, I would say, leeway or gap in the amount of deduction that's available to your business, because there's a lot of things that can be related to your business. I'm just going to name a few here. For example, if you're running a business full time, you should be really deducting your business travel, right? Any kind of travel that you do for your business, like you're going to a conference, say you're attending like an Amazon FBA conference, right? Or ClickFunnels conference. That's something that's deductible and you should include. If you're meeting anyone, your supplier, if you're conducting business, your meals should be deductible. Some people don't know that, right? If you're actually, a lot of time we don't have an actual office, we just run our business from a home office. There's a home office deduction that's quite significant for business owners that they should actually be looking at. Where if they're only if they're not looking at that, we want, for one of our clients, we would get them back $12,000 more in a tax deduction, because they were able to deduct, say, their rent, mortgage, utilities, repair, maintenance they've done around their home office, and they would take that deduction. So there's just many, many more things like that where they need to look at and say, am I doing the best job I can to manage this part of my business, this tax planning part of my business, versus am I just kind of giving money away to the government because I decided not to pay attention to this? I decided that I have made enough money, right, where I don't need another. I don't know. I don't feel like anyone really say that, but I see clients tell me that. Like, I ask them, hey, why don't you do more tax planning? Like, I make enough money. It's fine. I'm like, you don't want another $30,000 in profit?
Yeah.
You don't wait.
It's strange,
so
you
rather drive this, I don't know, lower model Ferrari and not get the high end Ferrari, for example, if you get another 30,000, right? I don't know. I know we've been doing Ferrari around, but I know a lot of business owners are more responsible with their money, and they probably want to take that and reinvest it, like in real estate, or any other things they want to do with it, really. So help their family out, right?
I would say what's strange about it is this. That, I mean, I don't have a problem with somebody not genuinely not caring about money. I don't think I know anybody who's actually like that. I know some Buddhist monks, are not well, but who probably the least interested in money of anyone I know. And enough is really like literally a religious conviction for them. Or in fact, I know some Christian monks, the same idea. But I
Christian
don't think
monks.
any business owner works that way, because otherwise, if you're obsessing about, can I grow my revenue $30,000 this year more than last year, which every single Amazon seller I've ever met really wants, without any exception, in my opinion, maybe the odd freak who doesn't want to grow their business, why would you not care about saving 30,000 in your profit? It's just a weird idea, isn't it? I guess there's a mentality shift that needs to happen, which is, I'm going through, just listening to you now, I'm like, 30,000 from 70,000 tax bill is just a monster saving. How come that's even legal? And I guess the answer is because you need to understand the tax law, and I guess you guys do and I don't, and that's extraordinary to me, that level of difference. I would assume that a good accountant would save you 10, 15, 20% of the tax, but you're saving, like, monster amounts. How is that even possible? It's kind of a dumb question, but I got to ask.
It's crazy, and it's something we've been trying to actively educate anyone that interacts with us to do. Like, we get a lot of DMs from a lot of beginners that sees our post maybe on Facebook or something and say they don't interact, and we try to help them try to understand that it's possible, because the tax code in IRS is just thousands of pages of small fine print that you got to read through, right? And we're not claiming that we know all 1,000 pages, and that's kind of part of the reason why we just focus on online business, because the tax code is massive. And if you just go to a generalist, right, where they do all type of business, they do the brick and mortar, they do the they help tax firms do their business, they help a law firm do their taxes. They don't actually know all 1,000 page, or like that tens of thousand pages of the tax code. They also just applying very general tax knowledge to everything, and they're just sprinkling it. And that's usually not the way you want to approach your tax code. You want someone who focus strictly on your type of niche, your type of business, and then knows deeply into the tax saving you can get for your business. And with that, we have seen, clients be very surprised and happy, obviously, that when we present to them at the end of the year or during the quarterly meetings, that they're getting much more tax saving than they believe. And we also send them what we call tax recommendation reports. We're like these are the things you start doing to at the end of year or during the quarters to increase your tax savings, so that at the end of the day you don't owe as much, right? And I would say that's kind of like the what we tell them is that when you don't owe as much, in a way, that's tax saving, right? If you thought you had a 70,000 tax bill, now you have a 30,000 tax bill. Well, that difference is money you don't have to pay out to the government I think, and also think, Michael, it's also a knowledge gap, right? A lot of people are not born to know accounting or know finance, but it's very good entrepreneurs. They're very good at running their business, and they should keep doing that. I'm just here saying, you guys, and like if you're like me, who when I did Shopify last year, I was like, oh man, this is tough. I'm like staying up sometimes till 2 a.m., 3 a.m. talking to customers or figuring out like these for my fulfillment and stuff. I'm like, this is hard work, and I can't imagine, how you scale to like 7 to 8 figures, how much crazier it is of how much work you got to do. And you're going to be doing those numbers, and if you can making that money, and you're taking the risk to be an entrepreneur, don't give away your hard-earned money, right? Like don't give away what you put all these hours into building this brand, and then just hand it over to Uncle Sam over there and say, here you go. Here's $70,000, free money for you. Go and support give more vaccine out to people.
Absolutely. So the UK equivalent, I think there's some judge years ago, a law lord, as we used to call it here. It's basically the equivalent before the Supreme Court existed in the UK. We have one now. We copied the Americans. But he said something like, tax evasion is obviously illegal, but tax avoidance is perfectly legal. Not only that, is not merely legal, but good practice to pay as little tax as you can. And he was an expert in the law of enforcing tax. So even he said this, basically he was saying, pay as little tax as you're legally allowed to. He's basically, I don't know, it's a very British kind of eccentric thing for a tax person to say. He probably shouldn't be advertising that, but he did. He said, you should be trying to pay as little tax as you can. Caveat:
he's absolutely right.
Legally,
yes.
So obviously you've given a good flavor of what it is you do for your clients, but we've got a couple of different options for people who people who are doing under 300,000 revenue a year or based outside the US, and then a discovery call for those who are doing over 300,000 and based in the US, which may be some listeners as well. So just talk us through what's on offer for the listeners.
Yeah, definitely, Michael. Like I was mentioning, we do get a lot of DMs from folks that are just like starting out or haven't done a lot of money yet, but could grow to a big number. And we would love to help everyone, right? But of course, everyone's time is limited. So what we did was we actually spent 3 months putting together a course with about 20 years plus of knowledge, me and my partner Stanford, and it's called Tax-Free eCom Hyperdrive Your After Tax Profit. And the point of this course is basically to give you that foundation that you were missing, across sales tax, across tax planning, across knowing all the IRS lingos, right? So you don't get lost in it. And then, of course, knowing how to get all the deductions that you didn't know about, and how to keep the money you have and grow it, and the cash flow projection you need to be doing. And of course, also retirement planning. We even throw that in for those people who are trying to exit and do valuation for their business. And I think it's just a great tool if they go and watch this course to kind of know that it'll be in good spot going forward, right? It's kind of the step before you actually need professional help. Usually, if you're just starting out, you're only making 50 to 100,000, or even like 200,000. You don't actually need professional help because it doesn't make enough of a difference. I would say after you do make 300K or above, you may want to get on a call with a CPA. CPAs prefer. And you want to kind of just lay down your business and say, hey, what can you help me with? What do you see in my business? And that's kind of what we do is we get on a discovery call with them. And then we kind of, ask to sign NDA to protect everyone, to make sure we have a fiduciary doing not to anyway, but just to give them extra peace of mind. We sign an NDA with them and say, hey, let us look at what you guys are doing, your books, your finances, and we'll give you just some, really just complimentary pointers of how your business is running, how is it going. And at that point, they can evaluate themselves. Do I need to go and get actual professional help, or they want to keep handling themselves? We leave that part up to them. So we kind of give two options for people who are just starting out and who are more established and actually need the professional support behind them. And that's what we're really all about, right? We provide that, I would say, year-round support, right? We're kind of just there in the background. It's like, hey, I need to call upon my CPA or your outsourced CFO office, if you will, to give you the right guidance and point me in the right direction, so I can just really just keep growing my business and taking it to the moon.
Excellent. So a couple of things, the links, folks, for the course, just go to AmazingFBA.com/free cash. We're not giving away free cash. I guess I could call it free cash flow, but the thing is people won't remember it. So
that might make it more enticing when I click on it.
Yeah, it would, wouldn't it? But that's not what's on offer, folks. We're not getting literal dollars yet, but you'll get it paid back from educating yourself. AmazingFBA.com/free cash. And then the discovery call, if you're doing $300,000 a year or upwards and you're based in the US, I think needs to be, isn't it? That you go to freecashflow.io/book. So those are the ones if you listen to the podcast. Obviously, you can check out the show notes at 10kcollective.com as well if you've lost track of the URLs. The other thing I just want to say is this, that I was speaking to a business broker, actually, no, it was a business acquirer, somebody who works for one of the biggest business acquirers out there in the FBA space, and he said, look, one of the most important things you can do is get a fractional CFO. In other words, a person you don't employ for a time because you couldn't afford it, but a really great person like you guys to be your fractional financial director if in the UK, and actually really take the responsibility to and the expertise to look at things through this kind of lens, because the amount of difference it makes to your business is startling. If you add $30,000 to your profit bottom line, then that's going to really affect also, I mean, tax planning strictly doesn't affect business value in the sense that they take the pre-tax profit as the number to multiply. But if you've got more cash in your account this year, next year, and the following year, when you come to sell your business, not only are you going to have more cash in your account, but you're going to actually multiply that by 3 or 4, whatever the multiple is you sell it for. So the future value of great input now, when you really do the numbers on that, can be astoundingly high. So I would just beg everyone out there, if you don't have an accountant, for goodness sake, get one. And if you don't have a fractional CFO and you're doing over $300,000, then really do check this sort of thing out, because I think it's absolutely, I cannot stress enough how big the difference is between businesses that have this and that don't, because I hear both sides of this equation from the businesses that are falling apart, and I see the ones that are killing it, and this is part of the picture. So, Alan, fantastic wisdom today. The last question for you is simply, what question should I have asked you?
What could I mean? No, I think Michael, honestly, you cover a great range of topics already in this podcast episode and live. And I mean, the only thing I just want to add is, if anyone is kind of getting serious about their business and interested in these topics, is definitely do reach out to someone who's, an expert in this field, and just ask them a couple questions. Most of them are really, hopefully most of them are really nice, and we'll just shoot you over some, some things you really should be looking at just on a very high, big picture level, right? Some things that you may not even be thinking about, and having that knowledge base about, you should just kind of just think about, and it'll make you point you in the right direction, even, right? And I think knowledge is just crucial, just key in this, in that just knowing it just, you just know the right question, right? Even this part of the course, when we have some of our students, they say, yeah, like I don't actually want to do accounting. I don't actually want to do tax myself, but just knowing it means that, when they go and interview a CPA, they ask the right question. Hey, are you certified? Hey, do you understand online business lingo? Do you know what PPC is? Do you know how Amazon FBA business works? Do you know about the storage fees and the payout timetable, right? And just having know the right things to even ask will make sure you hire the right people for your team, right? Knowing that you're not going to bring in someone that just going to do a shoddy job and not really take care of your things. And to address your other point, Michael, we actually kind of went down that line of a business that came to us, approaching us saying, hey, I'm running a really big business. I have all these guys coming after me, like who want to buy my business, who want to value my business. And then I asked them, okay, great. Can I see your balance sheet? Can I see an income statement? They're like, what is that? Like, I don't know any responsible, I would say VC guy that would buy a business without knowing that they have some sort of balance sheet or income statement. I can't see anyone doing that, right?
Yeah.
So this person was obviously not ready, and he was in kind of like a little bit of denial mode. But then when I approached him to actually say, you probably need these things, he kind of like, no, I don't. I can sell this business just fine. And as far as I know, I don't think he has sold his business yet. I check his registration; it's still under him. I'm like, yeah, he needs these things in place. Like no sane VC is gonna buy a business where the business owner does not understand his own numbers, doesn't understand his forecasting, doesn't understand how the business is gonna go. Right? No, you gotta be crazy, or you just have a lot of money to burn. Right, or like SoftBank or something, but
I don't think anybody's going to do that. To be honest, I've spoken to. I am not a business buyer or broker, but I've spoken to, must be about, I don't know, 12 or something, most of them in the last few months, and every single person wants clean financials, bar nobody. I mean, there is nobody I've ever spoken to who's a serious business buyer or broker.
Yeah.
So you're 100% right. So yeah, if that's you, maybe you need to get in touch with Alan and get yourself sorted. But meantime, it just remains for me to say, Alan, great topics. You've really given us a lot to think about. Really great, clear discussion about working capital. One of my big sort of things to discuss, to answer the question, how much money do we need to grow our business to the point where it's going to be what we really want it to be? And great advice on the sales and tax planning generally. So just remains for me to say big thank you for coming on the show.
Yeah, definitely, 100%, Michael. And I'm happy to share this knowledge with the folks, and hopefully they were able to take some of that away for them, and really use it to grow the business and gain the knowledge to ask the right questions to the accountant, right? Hopefully to hire the right one.
Great stuff.